Yeah, thank you everyone, and thanks to Natalie and the team for organising. Why don't we start with some quick introductions? I'll maybe start with you, Michael, and work your way back towards mate.
Perfect. Thanks a lot, Simon, and thanks for those of you that have stuck around to talk about data management, data controls, and data governance. I'm surprised that not more of you have sort of come in. We have to expand the room. But in terms of myself, I head up the professional services function at Behaviox. So Behaviox is a broadly sophisticated AI organisation. We have a number of products and services that we offer to turn your data into insights. But I think for this conversation, the reason that I've been invited along is because I deal with questions of data risk and data governance at all of the customers that we represent and we work with. I'd say 18 months ago, it wasn't very topical at all. People were very concerned about putting in some sort of application or some solution, whereas now they're very concerned about where is our data going, is it being used for the right purposes, and making sure that it's not being leaked or put into any sort of risky scenarios because it is valuable. So yeah, thanks a lot.
Hi, I'm Marina Palermo. I'm a managing director at TD Securities. I actually not sure people appreciate what I do when they invited me here. But I actually sit within the investment banking division of the bank. TD is one of the largest North American banks with a full suite of products, but I sit within investment banking, advising businesses in mergers and acquisitions and fundraisings. So I specifically, I think probably the reason why I was possibly invited is like I cover RegTech and GRC data analytics. So I've seen a number of companies of various sizes in products, technologies, business models and teams over my 20-year career on this. Nice to be here.
Hi, I'm Howard Rawstron. I work in Lloyds Banking Group in the economic crime prevention area. So again, a little bit like Marina, maybe some of it's around what the elements that I'm going to add today will be more around the practicalities of how we use data in the economic crime world and starting to talk about where poor data is utilised, some of the ramifications of what that could be. So stick around and I'll hopefully bring some of that to life for you.
Yeah, thank you all. Michael, you sort of touched on it briefly during your introduction and your role at Behaviox. What importance does having a secure and robust approach to data compliance have for financial institutions, particularly going forward?
Yeah, I think it's hugely important, and there are wide-ranging impacts of dealing with data correctly and incorrectly. So I'd say the first thing to take into account is that the whole industry, whether you're a financial institution or you're a vendor, is built on trust. So if you don't have the correct governance in place, you don't handle data correctly, and you don't utilize the technology that's available to you, and you erode that trust, regardless of whether you're doing some sort of checkbox exercise that says we deal with data appropriately, and you put that data at risk, then you're going to lose customers, you're going to lose profits, and you're going to lose out on opportunities. So at Behaviox, we're tackling this head on to the point where we're really looking at the people, the processes, and the technology that are being put in place when it comes to data governance. We also have defined personas at Behaviox and at our customers around data administration. And this is where you actually have someone that's accountable for security, for data retention, for data residency, to make sure that they're accountable and that customers are getting a little bit more inspired with confidence that their data is being used appropriately. So, yeah, hugely important.
Yeah, absolutely. And I'll go to Howard, then I'll come to you, Marina. How are you approaching it at Lloyds?
Yeah. So I think to me, one of the things that Lloyds has done quite interestingly, and I think this has become more universal in the UK, is that data management and data compliance and governance always felt very segmented from a lot of the colleagues, as in, this is what these people do over here. It's nothing to do with us. We just do our job, which could be an operational task. It could be something around opening an account, reporting to the regulator. that has totally pivoted, I'd say, probably over the last 4 or 5 years into everybody has a core element to play. And some of the UK regulation drove that change because it started to talk about data ownership and the ramifications of getting data points incorrect. So from a Lloyd's perspective, every colleague would sit there and say they have an accountability for the quality of the data that the group owns. It isn't purely the data compliance team's responsibility. And that's taken time. It's taken 2-3 years to embed within the group. But I'd like to think now that if there's any colleague that you talk to, they would understand the implications and their reliability and what they need to do.
So a real cultural shift.
Definitely, definitely.
Awesome. And Marina, what about in the application within investment banking at TD? How do you and your team and your division approach data security and data security?
Yeah. Yeah, I'll bring a different perspective. I think I advise a number of businesses that support data handling, and I can say the way they sell and where they are successful is when they actually support clients to hit the P&L. So it's both top line and cost basis. So avoiding not only the fines and the costs, litigation, but also improve efficiency of the entire enterprise and also maintain retention. I think you mentioned retention a number of times, and the perception of appropriate data handling is crucial for retaining businesses and customers. So sorry to be the banker in the room, but it is really a P&L impact straight to it.
Yeah, and reputational risk is obviously vital in financial services. Excuse me. What are some of the largest obstacles that teams are facing in terms of adherence for data protection and privacy and security regulations, Michael?
Yeah, so I can touch on that. And I think for those of you in the room that maybe aren't from the Southern Hemisphere, you have to get caught up on the data versus data question to begin with. So yeah, I've had data knocked out of me. I've been here for 20 odd years now, so it is data. But in terms of the inherent problems when it comes to data governance, really it's a case of how global we're becoming as a financial services function, how disparate some of the teams are, and then how siloed a lot of the technology solutions are. So if you take those three pillars into account, it becomes very challenging to get data in the right place, to find the right accountable people for that data, and to make sure that it is secure and being used appropriately. So that's something that we do at Baybox actually, is we, a lot of the time, work with global institutions and consolidate different applications to bring data into one single repository globally. And then in terms of the accountability piece, I completely agree with Howard. It then becomes an entire organization responsibility to handle data appropriately, to make sure that it's not just the data governance team's responsibility. We all have a role to play, and we're all data stewards to make sure there's no leakage and that we're dealing with it appropriately. But yeah, those are the sort of three challenges that I would highlight.
Yeah, thanks. And Howard, tying that back into your comments earlier around the importance for cultural shift, how do you, leading economic crime and the oversights and insights within that, how do you drive that cultural change across, particularly as regulations change?
Yeah, so I think a lot of it is understanding the ramifications of when it goes wrong, which may sound a little bit bleak as well, but within the economic crime world, the data that we use can have a significant effect on an individual. If we've got inappropriate data and start to generate a suspicious activity report and report that through to the National Crime Agency, somebody could be investigated, somebody could go through criminal proceedings, and that could be from any form of incorrect data information. And there's some real interesting points, I think, that I've seen during my career, not necessarily with Lloyd's, but with other organisations, where you've got people making quite fundamental decisions around how data moves and how data is stored and classified, who don't really think of it with that holistic view across all risks. So a good example is a lot of legacy banks within the UK have grown by acquisition or merger, is when you start to merge books together. I know an exact example of this where there was cash-related payments that were on one book, and they said, actually, it's easier for us to classify these as backs when we migrate that back book data over. Now, from a customer perspective, maybe that wouldn't mean too much. The statement would still say there was a credit that was in there. But when you're looking at criminality, whether that's financial crime or fraud, the differentiation between a backed payment and cash is actually fundamental. So to me, one of the things is making sure wherever there is either any change, significant projects, you don't think of it with a mono-risk hat on. You have to consider that expertise across the whole range of risks under which that organisation operates.
Yeah, thanks. And we talked earlier about, you know, not just within RegTech and financial services, but that importance of data accuracy and data completeness being two separate things, but obviously vital in terms of any kind of decision making. Marina, RegTech solutions, how can they improve organisational practices sort of holistically, and how does TD approach RegTech and engaging?
Look, TD has a very let's say orthodox approach to procuring. I think the large banks still have a lot of legacy technologies embedded, and there's obviously it's slow to adopt the technologies. So my role is actually to support introducing some of the companies I come across that have very innovative approaches to the data, or differentiated data sets, or more AI and fast moving technologies in solutions. So I've been trying to do that because I come across a lot of this in conferences like this, or with my market mapping and origination exercises. But the truth is, this is still low adoption, or slow, let's say, slow adoption of this. But I think I see increasingly a lot of the transaction monitoring capabilities, the more those solutions, biometrics, behavioral biometrics, or the biometrics encryption, those protecting personal data as well. So there's a number of new technologies that are coming, and people are the adoption has been increasing.
Yeah, thanks. And advanced analytics, machine learning, and
for sure. To be honest, machine learning or AI is something that has been in the industry, or of processing huge amounts of data particularly in fraud, for a long time. It's just probably because AI has become such a good thing. It's such a great thing in the last couple of years. But we've been using that. We've been seeing companies adopting that for a long time. I think it's a new thing.
Yeah, I mean, absolutely. On the fraud way, particularly, is so advanced in utilising behavioural data, biometrics, any form of data point that would generate a view of, is this out of the ordinary? I think you're absolutely spot on, Marina, is that where you look at fraud and compare it to financial crime, there is a disparity. Financial crime is still quite historic on using predominantly transactional data activity. And that migration, as we move into understanding fraud world, how does it operate? How do I look at geolocation, for instance? How's that device being utilised? those data points can equally have a very positive impact on identifying financial crime as well. And that move within Lloyds, again, was the reason why when I introduced said it's economic crime prevention was exactly that point, is we bring together fraud and financial crime as two areas where the controls, you can have similarity. The tooling, getting back to the RegTech bit, you can have similar tooling across both. And if you can get that holy grail of utilising and sharing data points between, you've got a much more robust and regulatory proof operation for your fraud and financial crime capabilities.
Yeah, if I could just add a comment to that. I think that's a pretty good segue into what Nabil mentioned in the keynote earlier today. So he actually described a little bit how we're moving away from rules-based lexicon systems, whether it's trade surveillance or comms surveillance, into now those more AI-led risk policy approach systems. So we've done that to great effect in the last couple of years. We've actually been working on AI models for probably 4 or 5 years at least, but now we're seeing the fruits of our labor in terms of that full data lineage through to then generation of alerts. So ingesting data types, whether that's trade data, but also comms data, whether it's chats, emails, voice calls, and then running various models on top of that to generate insights. And I think that's where the industry is moving, is they're using more of those advanced AI tools to develop and unearth data that might be interesting and worthy of further investigation. But then there's the nuances that come with that, which is it explainable, is it testable, and is there change management that goes along with that? And then ultimately the question is, are you using our data for any purpose that you haven't specified? So it's very clear that there has to be good agreements in place now for how other organizations and third parties and vendors and suppliers are then using that data after it's been provided.
I think sorry, we're having a bit of a chat here, aren't we? Is the other bit to me as well is around the geographical location of where that data's stored and held. So this creates quite an interesting dynamic with the UK government around some of the public sector data that we can utilise and ingest into certain tools within the UK, but actually the appetite to offshore some of that, which is very prevalent across a lot of organisations, is looking at productivity and offshoring. I do feel we've still got a way to go on getting that agreement. And in this day and age, it seems quite draconian in a way to think I'm adverse to data going to another continent because I can build the right level of controls around that data wherever it goes. And we know in view of things like AI, advanced technologies, data just flows freely now. So I think one of the things from a lobbying perspective is trying to get to that view across the public sector, the ability to share that data cross geography, whether that's because your operation sits there or even whether it's investigations that are more global, is really, really important.
Yeah, data interoperability is so vital. And my technical background was actually geospatial, and when I studied that 25 years ago, we were doing AI and ML back then, and it had existed for decades before that. It's actually quite a mature technology, to your point, Morena. Michael, what tools and strategies should firms employ when thinking about best governance practices?
I think I probably can answer on the strategy standpoint, because the strategy that you need to think about is making sure that you've got the right strategy in place for people, process, and tooling. So the accountability piece, as Howard mentioned, like obviously having one accountable owner or team is the starting point, but then dispersing or delegating authority to individuals in the organisation as well to say, well, you're all accountable for how we're dealing with these different types of data. Putting in place the right processes then, so moving on to that piece, you have to have a process in place that creates the least possible friction. There's no point in trying to put in place a process that no one follows, because then data governance becomes nullified. And then in terms of the technology solutions that you're implementing, there's a lot of spaghetti-o solutions out there in terms of you've over time added solution on top of solution on top of solution. So now it's a case of choosing the right vendors and the right partners. They're going to scale and be able to consolidate maybe 5 different tool sets into one tool. And then having all of that in place from a strategy perspective means that you're going to build a data governance initiative that's going to scale over time and maybe consolidate rather than cause more problems and more issues.
Thanks. Excuse me. And Marina, from your career, what are your thoughts, I guess, in terms of tools and strategies that banks can and enterprise?
Yeah, I completely agree to your point, is integration of different capabilities. So we see increasingly offerings that we call a single platform, or they try to incorporate multiple functions as opposed to the point solutions that are aggregated. So the ability to provide a number of offerings into one single platform combined with the ability to orchestrate the workflows, I think these are the two main trends I see across the demand in vendors. And there are very interesting things happening, particularly now I'll bring my mergers and acquisitions, but consolidation has been quite helpful and useful in supporting the integration of multiple offerings.
Yeah, and in I guess in mergers and acquisitions, that would take quite a bit of work, I'd imagine, to...
It's been super busy, and it is a sector that attracts a lot of attention from investors, and where there are some of the large players that have been super acquisitive. Valuations have, for good tech and differentiated data sets, have been standing quite strong, even in not so strong markets, and even despite market political turmoil. I think it's still, particularly in Europe, is still standing quite well.
Just a quick point as well. I think one of the things that I definitely see is even ignoring vendors that are in place or RegTech that can help support is where people, for the best intentions, create things like spreadsheets and just have all these, we call EUCs, end user computing type of tools, because I want to work around the system. And they are absolutely shocking, because I think this is where you can totally get out of control with how is that data held? Is it still accurate? Have you classified it correctly? Have you archived it appropriately? So the whole, I think that end-to-end view of the governance of the data, from classification through to archiving, is important, and just ensuring that you've got the right mechanisms to say, people, as I say, for best intentions, may have created a standalone, I'd use database in the loosest sense of the word. How do you actually identify and manage those type of things?
And who's the owner, and
exactly.
and who may be the custodian, because they could be two separate things, obviously. I probably should have mentioned this at the beginning, but here we go. We've got some audience. I was going to say, if you want to punch in some questions into the app, they will come up on our trusty iPad. So I might go to one of those questions now. We've got a couple. How can financial institutions balance the need for comprehensive data sharing to combat economic crime with stringent privacy regulations and customer trust concerns? I might give
Who's that for?
I might give that.
Thank you.
Might give that to you, given the economic crime.
Yes. Actually, within economic crime, we are exceptionally fortunate that the way that the data commissioner and the economic crime type of regulation is written is quite, I'd use the word favourable, but that's probably not the right word. It ensures that we have the ability to disclose data between organisations. So 2 years ago in the UK, a pivotal piece of economic crime legislation came into place, which was the Economic Crime and Corporate Transparency Act. Significant, it covers a massive different activities, from crypto to reform of Companies House. But one of the bits that it also extended was the carve out in relation to data sharing, which previously was fraud, which is why fraud was very advanced. We were able to share data in relation to fraud between organisations, to the term criminality. So that actually opened up a whole new lexicon of different things that we could share data for. So the Economic Crime and Corporate Transparency Act, one of the things that it now does is if I as Lloyds would identify that another organisation could have data to help inform a case that I'm working on, I can actively go to that organisation and request that data. And that organisation is covered and protected under the Economic Crime and Corporate Transparency Act to provide that information back to me, which compared to a lot of other risk types is like mind-blowing that can happen. The other thing, as well as requesting information under the Act, is that I, as an organisation, could provide information to another organisation proactively and say, this money's moved from one of our accounts into one of your accounts. It was a significant amount. We know where the money came from. We feel that you need to look at the recipient of this account, whether it was an individual or a business. So I think just answering the question, hopefully that gives a bit of a painted picture of what it's about, is the ability under the Economic Crime and Corporate Transparency Act provides us with the legal mechanism to do that in a safe and secure way.
Yeah, very interesting. In Australia, we have a Australian Financial Crime Exchange, the AFCX, that does similar work with the 4 big banks in Australia. So, and from my experience working in crypto before, leading the crypto industry body, looking at ways on how do we then engage with the crypto industry in terms of providing, customer protections, really. We've got another question. What are the practical challenges firms face when integrating advanced analytics and machine learning into existing data governance frameworks, and how can they overcome those hurdles? So,
yeah, I can
Michael, Marina,
give a first go at that, and then Marina can go as well. So some of the challenges, right, is basically integrating these advanced analytics or AI-based solutions with legacy model governance functions within large financial institutions would be, I'd say, one example of the challenges that you face. And it can be a case of square peg, round hole, unless you engage those teams early. So if you're engaging these model risk functions early and helping them to understand how you're utilizing data, how the models that you're using are identifying risks and potentially not adjudicating on that data, so you're not infringing anything that you shouldn't be doing, then you're going to have much more success if you engage in those teams. If you leave it until the last minute and you implement a new advanced solution without engaging those teams, there can be significant blockers from a timeline perspective. Perhaps you need to do significant changes on an application, either configuration or code-based, or it can be blocked in its entirety. So you won't be able to use those tooling, and then guess what? Your competitors who have engaged those teams faster can use those tools. So yeah, case of new applications trying to be plugged into those legacy frameworks and legacy processes. But if you head them off, then there's ways to get around it.
Yeah, if I may add, I think the time to integrate or implementation is key. It should be a key point driving the decision for which vendor you adopt. And we see the business models that thrive are those that are that can go quick and become live in relatively short time frames as opposed to big, massive IT projects. And that also tends to help quite a bit maintaining the product up to date as opposed to becoming another legacy project in a couple of years' time. So I think a choice of a vendor is key.
Yeah, data and product roadmap.
Yeah, just a quick, I think the other bit to me is around the partnership building house view versus vendor off the shelf view. And I think considering those two as part of your decision tree, and I think, Marina, to your point, you've got to be careful you're not building this elephant of a tech project that's going to take you 20 years, by which time in 20 minutes tech moves nowadays, is a real interesting component part within financial services. And it does feel that there's becoming more of a swell of partnership building house than off-the-shelf proprietary. So just an interesting.
Yeah, there was almost a point earlier in the day about this whole, it's not build versus buy, it's build and buy. It's making sure that you're taking the right approach for the specific use case. I'm obviously hugely biased, being a vendor, like I want you to buy, but you do have to make that determination, right? Especially with these advanced AI solutions. Are you really going to spend the hundreds of thousands of dollars a day that it will take to retrain models and to Marina's point, continuously improve those models on an ongoing basis? Your team is likely going to want to implement something and then go hands off. It's the job of vendors like us to do that continuous improvement effort and improve not based on your own internal identifiers, but actually the whole suite and the whole cohort of your peers. Because if we're taking in all of the data and all the learnings from all of the other peer group within a particular industry vertical, then we're likely to improve on a much quicker basis, I guess, than a single organisation or a single entity.
Yeah, thanks. That actually leads into our final question, and recognising we're standing between you and your lunch, we'll try and get through it quickly. But I spent a few years selling tech services into JP Morgan, Bloomberg, Morgan Stanley, and it leads into this question. I think resilience and being partnering, getting to that trust, it sounds cliched, but getting to that trusted advisor position where I'm not really selling, I'm listening and offering trying to help them solve their problems. But how should organisations approach partnering with external providers for either guidance, support or technology for help in meeting data compliance expectations? So,
do you want me to have a go as the vendor? Here's the I think advice that I would give when doing that selection. One, it's not a vendor selection process anymore. It's a strategic partnership selection. So is this the organisation that you're going to want to grow with over the coming years? And then subsequent to that, it's do they have the requisite elements or components for you to be successful as a business as well. And if I just take the one lens of data governance, it is, do they have the requisite people, process and technology in-house? And do they have the right accreditation? So whether it's SOC 2 or any ISO certification that's going to put you at a little bit more ease, I guess, that you're working with a trusted advisor. And then the final point is, are they walking the walk? Are they actually doing what they say they're doing in terms of data handling and data governance, particularly when it comes to all of the AI-based solutions now? Are they telling you how they're utilizing the data? Is the data that you want to be utilized being utilized for retraining purposes? And do you have transparency and visibility over that and a way to drive the best outcomes for you as an organization going forwards? Thinking about the partners in the space, I think one person made the comment earlier, just pick one, just choose one and go with it and evolve. Sometimes there's no better advice than that, only after you've probably evaluated and spoken to all of them.
I did a data lake rationalization project in the US, and I've found with an French open source software provider looking to replace an off-the-shelf product, and I think that's a strategy as well, that if you're a RegTech or a scale-up, you might look to partner with one of those key vendors so you're coming in with some legitimacy. But let's hear from the buy side before we wrap up, from Marina and Howard.
So from a business model perspective, is more from an investment perspective. Obviously, subscription models with highly recurring revenue, few people is what investors tend to look for. But I completely agree from a buy-side perspective, from a customer perspective, everyone looks to have proper customer support and someone that they can call if there is need for any adjustment or if there are doubts about it. Or some need for customization. So I think the people element is inevitable. Obey tends to put a little bit of your multiples down.
Have to have redundancies in place. Yeah, Howard.
Yeah, and I think to me, this might sound like 101, know actually what your model wants to do. So I think I've seen tech projects where people really haven't got a Scooby, what they really want it to do, but they embark on something. So have a very clear definition of what is this project, what does this model want to do, what are the elements of the model where we need to make sure we've got the level of robust information. Is it a decision maker? Is it some form of tool just to help direct customers? We'll make different decisions.
Well, yeah, thank you everyone for coming and joining. Please come ask questions, say g'day. Michael and I actually we found out from the same small city in Australia.
I've not met anyone else from Hobart until today, after about 20 odd years. So there you go.
Yeah, so thank you, Howard, Marina, and Michael, and thank you all for joining us.
Thanks all.
Thanks everyone.
Okay.
Thank you.